All right. So first of all, check homework, who submit the homework. Then we can switch into some another topic. First of all, yeah, okay. So I gave generally three question. In a first question, I want to ask what is IFC, institutional funding candle. Provide two example. In a second question, two example about liquidity sweep. And third one is how to identify valid POI. So few people respond this homework. So I will study one by one. So let's open the first chart. Okay, so about first one is to identify IFC. IFC generally is a little bit upgrade version of the auto block, you can say. And in this case, I'm going to show you exactly. Here, like here, you can see this one mark the break the low, which is a indication that market taken out the liquidity and price go higher. So this is actual IFC, which is correct here, because market need liquidity before go higher and lower. So, and this can be used, we can see on the extreme in continuation and everywhere. Okay, but because this is very powerful candlestick, when we can see on the demand zone and supply zone, then most of the time trend has been changed and continuation. So this one is correct. And one more example, if I can see here. Okay. For example, here, just a quick example. This one is taken out the liquidity, and this entire candle act like our IFC. And for example, here we type here, and then this candle act like a IFC. IFC means basically which took out the previous low, previous candle high or low, and then close below or above it. Then this one is called IFC. Same thing is here. This one I took out liquidity. So entire candle act like our IFC. Okay. So this one is correct. And now let's switch on another. Okay. Yeah. As we can see here, this one is a mark and this is actual IFC. And in this case, market actually fill the order block, sorry, fill the imbalance. So this is little bit, we can switch here. Sorry, we can mark this one, this week in this case, actually, because if you mark entire candle, so you can see next candle close taken out this high and close below it. So this is not uh, uh, valid to entire candle, to take entire candle, because there is no imbalance. So this is a refinement zone. We can use it for the buy and sell. Okay. For example, here, as I told you, market taken out the this high, and this entire candle act like our IFC. Okay, now Let's switch into another one. Yes, this one is IFC, but we need some proper imbalance to mark entire candle, but you can mark this area. Okay, but if you are trying to entire candle, then you can see this candle is mitigate, sorry, take this candle taken out means mitigate this low. So there is a, we can't use entire candle, so you have to uh, identify valid zone. Okay, so in this case, this is our zone when we can take the entry, but this is actual IFC, institutional funding candle, and same thing happen here, taken out the low, sorry, high, and this entire candle is our IFC. Okay, and let me show you some more quick example if possible here. Here is not. Okay, so delete all things. Yeah, this one is not IFC is here. Why? Because market did not sweep the previous high this here, because this is a last bullish candle. I'm sorry. So this is bullish candle is here, correct? And the next candle moving between this. If market go higher and sweep this one and close below it, so this one is a called IFC. But in this case, this is not IFC. And general order block and IFC is different, because this one is order block. Okay. And this can be your order block. And this can be also your order block. But this is IFC. And this is also IFC. Okay. Now switch into another one. This is not IFC actually. Why? Because after break this structure, this one, and how we can sell, you have to, you can see this candle is mitigated by this move. So there is no longer available here. There is no longer valid here. But you can see in the left side, this is a clean, and this zone is our IFC. I mean, this candle is IFC. This is valid for the sell. Okay. And same thing is here. Market taken out this low, and this candle act like our IFC. Correct. Okay. But you have to identify which is actual IFC candle. I'm not talking about this is a buy or sell, but to identify, how we can identify, simply taken out the high, and this entire candle become our IFC, because this is taken out the all stop loss which was available here and then close below it. And these big manipulated, created by banks and funds managers, I mean institutional. Okay, they grab the liquidity and push higher, and grab the liquidity and push lower. Okay, so in this case, this one is a valid. Now let's switch into another one. Okay, this is a taken out the liquidity, correct? Yes, this can be also. Yeah, one more thing is here. I wanna mention here that market sometime what happened after taking out this previous high, market maybe did not sweep the high, just close above it, the next candle close below it. So in this case is also count as a IFC, which is a really interesting thing is here. And in this case, you can see at this point, this minor structure close below it. So this is our IFC. Okay. Okay. All right. So this is also valid because it's about the previous candles. So previous candles high and this applies. Okay. This is a strong supply. Right. Okay. Great. Now let's switch into another one. Example of liquidity sweep. Okay. Mm, like this. Okay. So before submit any URL, trading view URL, you have to must check that you are placing correct URL or not. Okay, liquidity sweep, correct. Market taken out the previous lower high and close our bid. This is also liquidity sweep. Okay, and okay, let me find one more example if possible. This can be also liquidity sweep. Mm, okay, let's see. I don't think there is any new. Mhm. If there is any high is here, so this can be also liquidity if create structure like this. So this can be also okay. So this one is correct. And let's see one more example. And if anybody have during uh, if anybody any question, then you can ask me here because okay, you can ask me here if any question regarding this. If everything is clear, then it's okay. Subtitle. Okay, let me check how we can enable subtitle. So, where is subtitle? I don't know because I never use it. Let's see where I can find subtitle. Live tones. Okay. All right. Now it's so in this case, you can see here market taken out the previous low, which is here, and close above it. So this is also valid our liquidity sweep and tap here and go higher. And same thing is here. If market sweep this low and close above it, so this is also become our liquidity sweep and this one is not relevant, but you can mark this one, and this one is our valid. Okay, and same thing is here, taking out this low and close above it. This one is also liquidity sweep. Okay, and this can be also our liquidity sweep. And we can see in continuation and reversal on every time frame, in higher time frame and lower time frame. Okay, so this is our liquidity sweep. Now let's switch into the next part. I mean, next one is here. Okay, this is a perfect example here. Into downside, you can see this one take, taken out the previous low is here and go higher. So this is a perfect example of the liquidity sweep. Same thing happen here. Sweep the liquidity and give a little bit reaction and then go higher. And this can be also liquidity sweep, correct? And this can be also liquidity sweep. This can also be liquidity sweep. And we can see in every time frame and everywhere, in a lower time frame and higher time frame, minor structure and major structure, we can see in every time frame. Okay, just sweep the high or low and close above or below it. So this is a bearish market, then market taking out the recent high and close below it. So this is a liquidity sweep, and this one is also liquidity sweep. Okay, and this is a strong confirmation for the buy and sell. If market taken out the previous high or low, just sweep the liquidity. Okay, now let's see one more example, how to identify valid POI. Okay, let's check first one. Okay, what is this? Sweep the high. Okay, this is already in a 15 minute, and this is a okay. All right, in this case, sweep the previous high, but uh, imbalance, correct? And you can use one more clear example, okay, for the valid POI, because I can't see in downside what is the structure and what happened. So I can't say anything here. Let me check second one. Yes, this one is a high probability POI because market taken out the previous high also. As you can see here, market taken out this high also and minor high, sweep the and then push downside, proper imbalance, and this is our high probability, and we can sell after some confirmation. So this is one is a valid. Not opening. And this one, let me try. Okay, this one is also not opening. Okay, I think three topic almost cover. Which topic you are struggling? Internal structure, enter. Okay, mark the correct structure and correlation between time frame. Okay, and entry and valid POI. All right, liquidity and entry types. Could you make a video profile? All right. So now let's back into the chart. Okay, so you can see here to identify the internal inducement, sorry, internal structure and major structure. I'm going to show you exactly. If market momentum is a bearish and after creating new lower high, market push downside like this, okay, and maybe like this. And after this, what happened here? Market break the structure in a downside, and after break this structure, we are anticipating price must be taken out the first inducement, which is here, right? And this is our first inducement, correct? And this one is called our inducement. And after taking out this high is here, and this low is a confirm. Okay. Until broken the inducement, taken out the inducement, lower low is not confirmed. And same thing apply in a bullish market. Until taken out the recent low, market did not create major high. And same thing is apply in a bearish market and same thing in a bullish market. Once market taken out the inducement, and probably we are looking here for sell, and sometime market give a little bit reaction and push higher to mitigate extreme, and then we can sell. Okay, and then market create new structure is here. Okay, and this one is our boss. Okay, and this one is the inducement, and this one is our extreme, and this high act like our engineering liquidity, which one is here. So overall this scenario, and same thing is here, break the structure, and after break this structure, where is our inducement? Here. Why? Because in this leg you can see there is no internal high. This one is recent high. Price must be taken out this high to go continue downside, and probably tap on the extreme and then sell. And same thing is here, and this thing will be applied in a higher time frame and lower time frame also. And if you are struggling that which time frame you should use for the structure mapping, as I mentioned, 15-minute structure is our higher time frame for day trader. Okay, and 5 minute is our medium time frame, and 1 minute is our entry time frame. 1 minute and 2 minute. Okay, so this is a thing, and I hope this is a you know very well, because video is also available and some diagram is also available. So let me show you some quick example on a live chart, then you can understand clearly. For example here, just this one is our lower low, and this high our inducement is here. Why this low confirm? Because market taken out the inducement. Until market did, if market did not taken this inducement and price go high lower, then this low is transferred there. Okay, but in this case market taken out the inducement, so this low is a valid, and tap on this order block and sell. And after break this structure in a downside, okay, and then what happened? Market create new lower high, push downside, and same thing again here. This is our internal structure. If you can mark here like this, okay, so this is our first high, which one is here, and this one is our inducement, correct? So this one is our inducement, and once market taken out this inducement, we can sell, sorry, we can mark this as a lower low. Okay, and market again push higher and close below it. Okay, so this one become our new break of structure. And what happened here? Market again push higher, and this one is not our inducement. Remember why? Because in this case, market did not take any internal structure, and this is our single leg like this. Okay, and market push higher and then go lower. So between this low and high, where is our first inducement? This one, which is market must be taken out to confirm lower low, which one is here. Okay, and this one is our lower high, and this one is our inducement. Correct. And inducement and engineering liquidity on both point, because here we can see above this there is no engineering liquidity available, means no high available, internal high. Okay, so in this case both are same, and price tap on extreme and go downside, and again break the structure, and same story repeat again and again. Okay, so these are clear for everyone. If anybody have any question, then you can ask me to unmute your mic, or you can write on chat. Okay, clear. All right, thank you. Okay. So this one, your all question answer and homework is clear to you. And now let's switch into some real chart, and I will ask you, and I will some do some back test. Okay, and I will ask you, you can annotate. Okay, so first of all, mark the structure, correct structure, and start from here. This one is a boss and boss. Okay, finally this was our new boss. Structure break here, and after break the structure, this one is our change of character, because these are lower low, lower high. Okay, choke, correct, and this one liquidity sweep. So first thing is here, once market break the major high, okay, you have to identify where is our POI. POI can be in two types. First one, liquidity sweep in a higher time frame, and second one on the inducement, after taking out the inducement, after taking out the engineering liquidity. So basically, we can see two types of POI. First one is here, as you can see here, market taking out the in this low and close above it. So this is our POI, also PI. Okay, and we can buy at this point in 1 minute till this level. And second POI, market break the structure. Okay, and after break the structure, this is an internal high, internal structure, and this is a first high, which is first low, which is already taken out by this move. Correct. And after taking out this, we can buy here at this point, and same thing is here. Okay, and next type is here, taking out the inducement, type on order block. Okay, so 2-3 types are possible scenario in POI. Okay, you have to see, check that which type of POI happen after break the structure. Okay, so in this case, market sweep this low, and after sweep this low we can buy at this point. And same thing happen here, market again, if you can see here, market break the structure is here. After break the structure, where is our inducement in this leg? Can you annotate here, everyone? So this was the structure. Okay, perfect. Yes, because in this entire leg, there is no pullback. This is our only one pullback is here, and this is our inducement, and this is our engineering liquidity, both thing. Okay, so always buy below it. And same thing is here. This is our inducement, taken out this low, minor sweep here, and then we can buy here. If you switch here at in a lower time frame in 1 minute, then we can see what happened here. Let me bar. Okay, if you switch here in M1 time frame, then you can see how price develop here in a 1 minute. Okay, so basically market sweep the low, previous low, and then what happened here? So you have to mark first internal structure, how market structure is developing here. So this is our internal structure, which is market pushing downside, lower low like this. So where is our recent low is here in this case. After sweep this low, where is our inducement? I mean, first structure in a lower time frame. Okay, this one. Okay, correct. Yes, this one. Okay, so this one is our first high, recent internal high, which must be taken out, means break the structure, and then we can see some bullish movement to the upside. Okay, because this is a first indication for the buy, and in this case, so let's see what happened next here. So market break this structure, and after break the structure, where is our POI when we can buy in this case? Okay. Market sweep this low. Okay. So after sweep this low, probably this is our inducement, and market taken out the inducement where we can buy, because market taken out the liquidity. After taking out the major liquidity, we are looking for the buy, not for the sell, because sell is not valid. Yeah, of course. Correct. Excellent. So this order block become our new zone for the buy. So in this case, we can buy here and put the stop loss just below is, but safer stop loss is here. And it doesn't mean that you need to every time put your stop loss just below it, because sometime this can be little bit more downside here sometime and then go higher. So in this case, you have to put your stop loss just below it. If this is a minor, then we can switch, we can scroll little bit downside for safety purpose, but we can use also this one is also. Okay, so this is our first chalk, and where is our okay, so where is our break even point and where is our target point? Okay, Okay, so remember one thing is here that when you are looking for buy and sell, then you have to wait for the actual structure. Where is our actual structure? M1 time frame. Then we can take first partial. If there is available very close, then you can move stop loss, because in this case, if you mark the M1 structure, which is actual structure, so this is our lower low and lower high because it took out the previous. Again, break the structure is downside, and this one liquidity sweep and push downside. Break the structure and market create new structure is here. Okay, pushing downside, and this is our single leg. Correct. So first partial is here because this is our correct. So this is our first partial point. Okay, and break even point when market activate and break the again new structure. For example, if market go higher and mitigate here and go higher, so after taking out this high, we can switch our stop loss on break even point. Correct. So let's see what happened next here. Okay, let's see. All right, so in this case, what kind of liquidity creating here? Anybody can see here liquidity? Okay. Actually, you can see here, this is our trend line liquidity. And in trend line liquidity, price must be taken out the origin of the liquidity. Okay, so this is our actual low point is here, which is must be taken out for the buy. Okay, and in this case, if order block is not available here, maybe if order block available here, for example, or maybe more below it. Okay, and then we can also buy here, because if market sweep this low and create any structure, then we can buy here also, because order block is not our primary. Main thing is liquidity. When market taken out the liquidity, then we can buy. So this is a trend line liquidity. When market taken out this low and mitigate this order block, we can buy. Okay, and our first target is here, and our major target, where is our major target? Is here. Exactly. This is our 15-minute major structure, because we are trading in a pro trend, major trend. Correct. So this is our major high. If you are selling here, for example, if you catch this move, like sweep the liquidity and you are selling here, right? Then you can't set your target M15 major low, which was maybe here and below it. Okay, for example. So we can set our target on the first inducement. Okay, because you are trading on the counter trend, but you are trading in a pro trend, in a major trend, then you can set your target on the higher major high and low. Okay, so let's see what happened here. Okay, so our entry activate is here. All right, so this is our first entry which activate here, and the next what happened, next candle open up, and when we can add more position is here. Okay, everyone, when we can add more position for the buy. Okay. We are already in 1 minute time frame. I don't think you need more chalk, boss, because we are already in lower time frame. Okay. So you can see market tap this extreme order block and price go higher. So in this case, this last selling candle before the buy is here, and we can add more position is here. Is a reason is a simple, because below it there is no unmitigated zone. So market has no chance, means very less chance. Okay, that market will be came back downside to mitigate anything, because everything is already mitigated and market push higher, and this is our single candle mitigation entry, which is already mentioned in ebook. Okay, so we can add more position is here. Okay, and target will be same. Okay, and let's see what happened next here. Market activate this one, and next entry. Where is our next entry? Okay, perfect. Excellent. So this is our become new entry for the buy is here, and stop loss just below it, because below it there is nothing unmitigated, everything is mitigated. Okay, our order flow, bullish order flow, developing here, and everything is mitigated. Okay, and target will be same here, because this is our M15 measure high, correct? So we can buy again here. Okay, let's see what happened here. Okay, so in this case, as you can see, market did not fill this order block. Okay, and missed by few micro pips, but price going upside. So this entry is still valid or not? And where is your next entry? Where is your next entry now? Everyone mark. Okay. Mm-hmm. All right. So right now, this entry is still valid. Why? The reason is a simple here. If you can see in a left side, market break the structure is here, which is also fine. And second thing is important. In this case, if you are marking this order block, which is here, so in this order block, there is a no inducement. And if this order block is mitigated by this move, then we can take this. Okay. And then what happened here? This low act like inducement, probably. And then what happened? Market push downside, mitigate this extreme and go higher. So in this case, this entry is still valid for the buy. Correct? If this mitigate by this move, okay, then you can take this entry for the buy continuation, same like this. Okay, so this entry is still valid. If market create new structure, okay, then this entry is not valid. Let's see what will be happen after this. Okay, so now this entry is not valid here, this one. Why? Because market create new structure, and this is a trend line type liquidity is here, and then Now our order block is here, which is first and second one, where we can the first sorry, this one is a area of interest when we can buy, and the second after taking out the inducement, which is here. Okay, this inducement taken out and we can buy also here. This is the origin of the trend line liquidity. And this one is not our inducement. This one is actually inducement, because this high not break by this move. I mean, sorry, this high does not break previous high. Okay, so price must be came back down this level and then we can buy. If not, then it's okay, because we are already in two position. Okay, okay, market move rapidly upside. Okay, yeah, one more thing is here. If you can see here at this point, this is our last bullish candle, and then market taken out the previous candle's low. Okay, and after taking out this low, these are IFC. This is our IFC, which is, and also taking out the liquidity. After taking out the liquidity, market have a chance for the upside and downside. Okay, because these are indication for the movement possible upside. Okay, so when market came back down this level, and we can add one more position at this point also, and these are aggressive entry. Why we are taking this entry? Because we are in pro trend. Okay, and you can't apply these things here, because this is a counter trend and this is pro trend, because you are following the major trend. Higher time frame and lower time frame both are bullish, then you are following this thing. Okay, so at this time, after this entry, where is our next zone when we can take entry for the buy? Everybody can mark here. Okay, 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 all right. So in this case, as we mark here, this is a minor structure has been taken out, correct? And like this, and go higher. And this is an internal structure. So we can use also this move, but look at this point here. Market sweep this liquidity is here, which is an indication that market don't wanna go more lower. Okay, if market take a normal pullback and go higher, and this is act like an inducement, and then we can continue buy. Okay, so actually this is also possible scenario for the buy, right? But if you are looking for buy, so this is your buy zone also possible, even there is a no inducement. Why? Because market taken out the liquidity. Okay, so market taken out the liquidity, and when market tap here and give any reaction for the candlestick confirmation, you can buy. Also possible, because market already taken out the liquidity for this move. Okay, if not, then you have to pay attention to mitigate this, which one is here on the extreme below it. And because this low, yeah, one more thing is here. You can see here, this is a really interesting thing is here. This move taken out by this move, and then what happened? Next candle push downside and fill this order block. I mean this supply. Sorry, this POI type here, this big. Okay, so this is an indication that this strength is not more valid for the buy, and sometimes happen here, this thing. So like this, for example, here market mitigate this one, so we can't use this one. If I remove this, so we can't use reuse this zone for the buy. Why? Because this is already mitigated by this black candle, and same thing happen here, correct? And this zone mitigated by this move, correct, and push higher. So this zone we can't use for the buy. Okay, so in this case, our this zone become our left for the buy, because proper imbalance and clean order block, and we can buy. So first entry is here, and second entry we can take here for the buy. Put the stop loss just below it. And second thing, if you are looking here for some confirmation, then you can wait here for candlestick confirmation. If market give any candlestick confirmation, then you can buy. Okay, market tap here. Okay. Yes. Okay. So as you can see here, market tap this order block and push higher. But in this case, our confirmation become this order block. I mean, this candlestick, which is very larger candle. And I don't think we should use this larger stop loss. Okay. But you can see here how price actually react here and finally go higher. If market sweep this low, for example, this candle is here, and push downside and sweep this low, so we can use this zone for the buy to the upside, and this become our high probability confirmation entry. Okay, but it's okay. Let's see. Yes, you can see market mitigate this zone, which I mark here, because this is our only one zone when we can buy. Okay, but we can't use, because if you are using this, then our stop loss is larger than as usual. Okay, so this is not good. All right, so finally our target meet our target, and 1 and 2 and 3 position still 9 hour, 9 hour almost, and 11 hour. Okay, which is really good, almost 30 hour. And as you can see here, after taking out the major inducement, after the mark the major POI, then you can scale position in M1 time frame. Then you don't need to switch a different time frame. Okay, you can follow only one time frame in a M1 time frame. But if you are in trading in counter trend, then this thing is not applicable here, because everything is a different story. And this is a short-term move for the sell, and this is aggressive move. And same thing happen here every time when market break the major structure, and pullback will be in a counter way, and the main impulse will be rapidly to the upside or downside. Okay, so this thing is clear to you everyone. If there is any question regarding this, you can ask me. Okay, clear. All right. So now let's back into the again 15-minute. So after break this structure, Where is our inducement? Okay, because market trend is a pro in a bullish market. So when we can again buy? Okay, great. Nice. So after this move, if you are looking this candle, so this is our inducement. Okay. If market develop any price action is here, create a pullback and go again higher like this. If move something like this, so where is our buy zone? Mark the correct structure, everyone. All right. So, okay. So generally, at this point, if you can see here, this area, sorry, this low is our first inducement. Okay. So price must be taken out this inducement before go higher. So this is our first zone when we can risk for the buy to the upside, correct? And the next one is on the extreme. Okay. And this extreme happen if this one is a cleaner order block is here, and then very highly chances market tap on this level and go higher. Okay. If there is not clear any structure is here, then very highly chances this low act like our engineering liquidity and tap on this order block, and then market tap this and go higher, correct? So these things will be happen here if there is not developed structure, this one. Okay. Then this is our inducement, because this is a first bearish candle which must be taken out, means a little bit pullback must be taken out before go higher. Okay, even there is no order block in 15 minutes, but we can buy after taking out this low, because main thing is a liquidity. Order block is not our primary. Order block is maybe secondary. Okay, but main thing is a liquidity inducement, correct? So let's see. Okay, so as you can see here, market taken out this liquidity after taking out this low, and now you should switch into lower time frame in a 1 minute to see how price actually reacting here, because in a 1 minute also there is no order block in a left side, because everything is mitigated. You can see we buy here, we bought here, and there is no unmitigated zone, but market taking out this low. Okay, because this is our inducement, correct? And this is our inducement. I'm sorry. Okay. Okay, so this is our 15-minute inducement. And after taking out the inducement, what you should in this case, because we are already, or you can say on extreme and inducement. So there is high probability market taking out this inducement. If there is develop any structure in M1 time frame, then we can buy. Okay, so where is our first high which must be taken out, must be taken out to confirm that the structure is a change, or we should sell or buy, and where we can buy? Okay. All right. All right. Yes, absolutely. This is our first high. Which one is here? Which must be break this structure. After break this structure, we can buy for the upside because already taken out the inducement, type on the extreme in a M15. And when market break this structure, and then we can buy possible here because this is our extreme, correct? And if market create any new structure is here, then also we can buy. But let's see price how actually react here. Okay, so market finally break this structure is here. And after break this structure, in this case, where is our inducement? And where is SMT? Everyone mark, where is SMT? Okay. So in this case, how many types of liquidity are looking here? Like what kind of liquidity is here? Yeah, great. Very good. Interesting. Wow. Good job. You can see this one is a first liquidity is a trend line, which is a broken and retailers introduce here for buy. And second is here, this is a trend line and everyone trying to buy here because market is a bullish and everyone buying here. And some people introduce here for sell when market break this trend line and they're looking for sell. And in a smart money concept, trader who trade based on the smart money, they looking here for buy. Okay, because break the structure. Okay, probably some people mark this is a chalk and some people mark this is a chalk. Okay, but after break this structure, where is our order block? This one, and everyone looking here for buy because they anticipating price must be go higher. Correct. And this actually not order block. This is SMT because above this there is no imbalance. Okay, that's why this is our low probability order block. If there is if market again go higher, okay, and then push downside, so this order block is become valid. Why? Because this low become our new inducement, correct? So in this case, this become valid, but right now this is not valid because market already break this structure. This become our inducement. Which one is here? Okay, and below this, where is our order block? If you can see in a extreme side, this one is our larger order block. Okay, and this is actually we can't use this kind of order block, but we can wait for the confirmation. Okay, some additional confirmation when market type here and give any confirmation, then we can use. Even if you use 50%, this one is also very larger. Okay, and there is no way, there is no chance. Okay, sometime market tap xt sorry 50% and sometime market did not tap 50%, but market go higher, but you are still waiting for 50%. There is no guarantee. Okay, but you can buy here like this for example. Okay, because your overall bias here, overall idea is a bullish here. Okay, it doesn't mean that market must be mitigate 50% or not. Okay, so let's see what happened next here. Right, as you can see here, market type here, and we can buy here uh, at this point. uh okay, but we always wait for confirmation for entry when we are in POI. Yes, if you are in 15-minute POI, then you have to wait for the confirmation for the buy and sell. We can't sell directly, because if you are trying to sell directly, then very highly chances maybe or sell on extreme, then it's good, then you can take entry for direct entry. But confirmation entry little bit give you some confidence that you are correct. Okay, that's why we use mostly confirmation and liquidity sweep based on entry. Okay, so after taking out this inducement, market tap on this level, and then what happened here? Taken out the all liquidity is here, and market close above it. So basically, this is indication when market taken out this engineering liquidity is here, correct? Because this is an inducement and this is engineering liquidity. Why I did not take this order block here? If I take this order block, just below is engineering liquidity. So in this case, both are very close. So we will I will prefer you to take extreme. Okay, if there is a larger gap between this, like this, then we can use the extreme, sorry, this one, first one, correct? But after some confirmation. Okay, so market taken out this engineering liquidity is here, and after taking out the engineering liquidity, market closed above it. So where we can buy? On the next candle open, and put the stop loss just below it. Okay, and when market where is our target is here, because this is our major high. Okay, so this become our new entry is here. This entry is also known as entry type 3. Okay, so let's see what happened next here. Market push higher, which is going good. Okay, so as you can see here, one more thing, market break the structure is here. Okay, after break this structure here, sorry, and this is our break of structure, and in this range here to here, where is our liquidity and what kind of liquidity is available here? Okay, all right. Hmm. Actually, this is our trend line type of liquidity is available. Market must be taken out this, and then we can continue go higher. And same thing happen here. As I told you here, this is our possible order block below it, but we can't, because just below it there is extreme order block which is here. Okay, so in this case we can take this one, and but this is a very larger, so we can apply same thing as here, just as I apply here. Wait for the confirmation for the buy and sell at this zone. Okay, and let's see what happened. Okay, let's see. Okay, so in this case, market sweep this liquidity is here, and what happened? Market go higher and give little bit reaction at this point, as I mentioned, because this is not high probability. If there is this order block is already mitigated, then we can use this order block. But this order block we can't use in this case. Just below is another extreme order block, which is high probability. So same thing happen here. Market tap on this zone and give a reaction here. Okay. And after this reaction, where we can buy here? Where we can buy? Okay, that's great. Because this zone act like our next POI for the buy. Reason is a simple, because market tap on this entire zone. I mean this box. Okay, this is our extreme demand zone. Tap here and give a reaction to see previous candle low, which one is here. Correct. And we can buy on this level, on this demand zone here, and put the stop loss just below it. Okay, and target will be same. M15 measure high, which one is here? All right, so let's see what will be happen next. Okay, market did not fill this order, but it's okay, it's still pending. Okay, okay, market did not create break this, sorry, fill this order, but market create new structure and break this high. Okay, but just sweep this high, but we need more confirmation for the buy if possible. Okay, that's great. Okay, now market close our weight, and both zone already mitigated, and this one is also mitigated, only this zone is unmitigated. So we can buy here and put the stop loss just below it, and target is the same. Correct. All right, let's see. Let's see, this one is mitigate or not. No, this one is also not mitigated, which is okay. Let's see. Okay. All right. So now where we can buy? When we can buy here? Because market break the structure is here finally. Okay, after break this structure, when we can buy, which level we can buy. Let me delete this one because this is not longer valid. Everyone mark. Okay. Yes, correct. Yeah, we have a possible two scenario in this case because market break the structure. Okay, and after break this structure, we can buy after taking out the inducement. Okay, and second entry after taking out the engineering liquidity. Okay, so where is our first inducement? Okay, all right. So actually, after break the structure, this is our first inducement, which is very looking very high probability because this one is a inducement, and after this law act like our engineering liquidity. Okay, because this is a single move, and we can buy here also because below it this is high probability, correct? And in both condition, when we can take risk. So as you can see here, after taking out this inducement, we can use this entire candle also and this refinement also. Why we can use this one? Because it's took out the previous candle low is here. That's why this zone become our high probability. Okay, and this one actually we can use entire zone for the buy. Okay, because this one is more high probability, right? And if you wanna some reduce risk, then you can mark previous candle like this. So you can mark this like this also. Okay, but actual structure, actual zone is here, correct? Okay, for the refinement purpose, we can mark this one, and stop loss just below it, and target is the same. M15 measure high, which one is here? Correct. Now let's see. Okay. So okay. So now if market push downside, we can add more position at this point. Which one is here? Correct. But market did not came back this level. We can add more position because it's took out the previous candle low and close above it. So this is a good indication, a strong indication. You can say, as I mentioned here, if you wanna a little bit increase your stop loss, and then you can increase your activation, your entry, you should use this previous candle high and this candle low for your entry. Just same thing apply here. Okay, then you can use here for the next entry for the buy and put the stop loss just below it, which is really good. Because if you are marking this entire candle, which is not good, and stop loss is very large. And this is our high probability zone for the buy. Same thing here, and our target is the same. M15 measure high, which one is here? Correct. Now let's see what happened next. Okay. All right. So generally market break the again structure, and after break the structure, we can switch our stop loss, move our stop loss on a break even point. Okay. So okay. Now let's see what happened. Yeah. One more thing is here. After break the structure, where is our inducement? Everyone. Okay. Yes. Correct. Okay. Okay. All right. So this is our first inducement is here. Why? Because it took out the previous candle high. So this become our inducement. If this is not taken out, so this become our inducement. So in this case, where you can buy, because this become our inducement. When you can buy, everyone. All right. So this order block is our next buying zone is here. And when market tap on the 15-minute PUI and in a like supply and demand, then you can stack your position in M1 time frame. Then you don't need to switch in different time frame. If you are switching different time frame, then you will get confused. Okay, and you can stack multiple position in M1 time frame also. All right, so let's see what happened next. Yeah, first stop loss should be just below it, this order block, which one is here. Okay, and our target is the same, is here. Correct. And now let's see what happened next. Okay, some interesting thing is here. We can also stack one more position is here, because this one is our new boss. After this boss, our liquidity is here. Okay, all right. And after this liquidity, this order block is our new zone for the buy is here. And put the stop loss just below it, and target will be same. Correct. And now let's see. Okay. All right. Again, market break the structure is here. And after break the structure, still market in a bullish trend. Let's wait for, okay. This is a single leg, correct. Minor structure, but don't take. Actually, here is also develop minor structure. If you can see here, correct. Yeah, absolutely correct. Yeah, every perfect. This one. Okay, so let's see. Oh wow. Okay, so final target meet here. You can see. So look at here how many entries are possible in a lower time frame. Correct. So this is a finish here about entry scaling. And if you have any question, you can ask me. So everything is clear here till now. Yeah, first entry. Yeah, sorry. I forgot to mention here. First entry hit a break even because market break the structure. We usually uh, our move stop loss on break even, then market push downside, and then this entry is stop loss. Sorry, break even. Yeah, first entry is absolutely on break even point. Okay, so can I ask question about boss? Yeah, of course you can ask. Actually, boss, uh, we can use boss when market close above it or below it. Then that's called proper boss. Okay, if market just sweep the liquidity, means break the structure, but did not uh, close above it or below it. So just simple sweep the liquidity. Okay. You can see here every time market close above it, close above it, close above it. So these are valid boss. If we move SL to break even after double boss, it will be more safer. Yeah, but if you are waiting for double boss, then you are switching a stop loss and break even. But I don't think this is not good because sometime what happened after pros go higher, like here 7 hour, 8 hour, and then you are still your stop loss on original point, and then market push downside. In some case, market hit the stop loss, then which is not good. And okay, so this is a enough for the day in this weekly webinar. And now let's switch into some question answer. And after this question answer finish, I will I will complete this and I will upload on How we put take a partial when we put to break even. Yes, we can when market push a little bit higher, like 5 hours, 6 hours, then you can take little bit partial, obviously, like 1%. If market hit the stop loss or break even, then you can take risk with same amount which you book in 1%. How about trailing stop loss? Trailing stop loss is a simple when market push higher high, and in M1 time frame, I'm talking about this like this. So we can simply like break the structure, move the stop loss, we can again break the structure, and then you can actually as per the you can switch here, break the structure here, again break the structure is here. Let's change the color here and here and here like this. M1 measure low or high. Okay, so if you have any more question, anybody, you can ask me. Otherwise, let me finish this session, and I will post on a Discord this video. You can watch later. And practice and do some back testing. Okay, and tomorrow is a Sunday, and you have some back testing. And if you face any problem during the market test, mark the structure, mark the POI, anything else, you can ask in a community. Can you talk about the recent trade you take? Which one? GBP USD. Okay. Trade breakdown. Okay. Let me show you some quick. First of all, switch in 15 minutes. Yes. So in this case, market, I think here, let me draw this one because this was our break-off structure in a 15 minute. And after break this structure, this is our internal structure. Okay. Here. Sorry. And this one is also new break-off structure. Okay. And after break the structure, where is our inducement? Our inducement was here. And correct. And if we can buy here, then what happened? Market came back this level, did not give no reaction, and market rapidly break this down. So when break this low, then I understand that market wanna test the extreme, okay, extreme level. And in this case, where is our extreme? Below it, okay, because this one is our unmitigated order block, okay. And after break this, and I came in a 1 minute. Then I see something here. Actually, those entry was really aggressive entry for the sell. Yeah. This demand or the block PY fail, push downside, and then I notice that market is a bearish, taking out the previous high, which one is here, create new structure and go downside. And this one is our 1 minute structure, like this, and push downside. This is a single leg. This is again taking out this high, and this one is a structure. And after taking out this high, okay, I was waiting for the some confirmation, and this was our SMT, because after change of character, everyone buying here gave a little bit reaction, and I was waiting here to fail this. And then what happened? Market pushed downside and go higher, and then failed. And then what happened here, as you can see, and this was a really aggressive entry, break this low, this sweep by this move, okay, and instantly I sold on the here on this wick, put the stop loss just above it, and this was actually a very aggressive entry. And why not this order block? Because this order block did not see previous candle high. Okay, so instantly sold here and stop loss just above it, and then I set my target, I think here, and but target did not reach at the target level. Sorry, I think, I don't know, 2.5 pip stop loss was almost here. Okay, so then market push downside, and when market break this internal structure, then I take a partial, and before this partial market break this structure, I switch my stop loss on break even and break this low. This is an internal structure, then I take some partial and then break the structure, and market push higher and change for the upside. And actually this is our 5 minute lag, and market taken out this 5 minute high, this one. I was also expecting that market taken out this 5 minute inducement and go again downside, and I missed this buy, which was here, which is really good entry for the buy, but I miss because market taken out this low and sweep above it. This was really good trade for the buy, but this is a high cost. Okay, so this was trade. So I think we should finish this session. All right, everyone, and practice and backtest for the next week, and prepare for the next week. All right, thank you, everyone. Are we going to have live session next week? Exactly. From Monday, I will start live trading session, and probably in New York session, because New York session, in London and New York, both session overlap, then very high volume. So I choose New York session, and everyone can trade. Yeah, New York, because London session is not available for everyone. That's why New York is very fine. All right, guys. So thank you so much. Attend this session. Let me finish this, and I will upload on Discord as soon as possible.